IFRS 16 Leases Disclosure. Please refer to IFRS 16 paragraph 51 to 59 for the disclosure requirements in the books of the lessee. The following format of this disclosure in a note related to leases in the books of the lessee is illustrated below. Please use this template for study purposes. Class example 14 will be used to illustrate the disclosure in the books of the lessee. Use the information provided in class examples 6, 9, 10, 11 and 12 for Rocco Limited. All the amounts used in this example can be found in those class examples that has already been dealt with. Also assume the following information with regards to Rocco Limited. Rocco Limited also recognized the following lease expenses, so in profit or loss. With regards to short-term leases for cell phones, 28,000 Rand was recognized as a lease expense for the years ended X16 and X17. The cash outflows relating to the short-term leases was also 28,000 Rand per year. The portfolio of short-term leases to which the company is committed at each of the reporting dates is similar to the portfolio for which the short-term lease expense was recognized. So that information just tells you the short-term leases that the entity is committed to is the same as what lease expenses was recognized for. There's no difference. Then Rocco Limited also have low value leases of office equipment where the lease expense for the years ended X16 and X17 was 10,000 Rand. That would have been your straight line expense, but the cash outflows for these leases amounted to 12,000 Rand for each of the years ended X16 and X17. Please refer back to the work we did under IFRS 16 paragraph 5 to 8 that deals with the low value and the short-term leases. In this example, I will now illustrate how you would disclose that information in the notes. Then the information also tells you that Rocco Limited uses the following time bands to disclose its lease liabilities. IFRS 16 requires the entity to decide which time bands to use. In FRK 201, I'll have to give you that information in a question. As we go through the example, you will see where you have to use this type of information. The required of this example is to disclose. Please remember the difference between disclose and present. Disclose is where we're working towards the notes that would accompany your financial statements. Related to leases entered into by Rocco Limited for the year ended 31 December 2017 in accordance with IFRS 16 leases, and remember to also always consider IAS 1 when doing presentation and disclosure. Now something to start realizing under IFRS 16 is Rocco Limited chose to disclose all information relating to leases in a single note. IFRS 16 provides a lot of detailed information that needs to be disclosed. The best way to do that is in one single note. Look out for information like this in a question because this will guide you towards preparing a complete note when this is what is required from you. So in this suggested solution, if we look at a proper heading, we start with the name of the company, notes for the year ended X17, and now based on that little discussion of the single note, we have one note that we will focus on in the rest of this presentation. One note. The heading of this note is lease contracts in which the company is the lessee. That's the name of the note and only that. I will go through each section of it separately. Please note that whenever we disclose and nothing has been mentioned to the contrary, you have to disclose comparative figures as well. The first section of this one note relates to the right of use asset. So please note it's note 28. It can be any number. In this example, we chose number 28. 28.1 is now relating to the right of use asset. It's still part of one single note. The only requirements that needs to be disclosed for purposes of the right of use asset is a reconciliation between the carrying amount at the beginning of the year and the carrying amount at the end of the year. Please note that this disclosure is not the same as an asset disclosure under IFRS 16 dealing with property, plant and equipment. You do not split that carrying amount between a cost and accumulated depreciation. The movements making up this reconciliation would then be any new additions. That would be if you acquired a new asset under a lease agreement, and that would be at the cost price of that asset. Please refer to class example 6 where we determine that cost price. The only other movement that we saw on this right of use asset was the annual depreciation charge. This was calculated in class example 12. So for 20x16, that brought us to a closing carrying amount of 157,12523, and then that would be your opening carrying amount the next financial period. Remeasurement of the lease liability is also part of a possible movement that you can find on the right of use asset, but please note we do not deal with the remeasurement of the lease liability on this level. The next section of this one note, please see again, it is now 28.2, it's still one note, relates to the disclosure of the income and expenses related to the lease. The expenses that we picked up in all of these examples was first of all the depreciation on the office building, 826 in both years. That was done in class example 11. Then remember on this example we had an annual lease payment that included a non-lease component for maintenance expenses. When we did the journal entries, you would have remembered that we had to recognize this maintenance expense separately through profit or loss. Therefore, it is another expense relating to this lease. This is still part of the 28.2 income and expenses relating to the lease section of the one note 28. And it now relates to the short-term and low-value asset lease expense. Remember, this information was given in the question. Please refer back to IFRS 16 paragraph 5 to 8 for purposes of determining this straight-lined lease expense. Under paragraph 5 to 8, the lessee has the option to elect the recognition exemption, where the lessee does not have to recognize a right of use asset or a lease liability, but they can recognize the lease expense through profit or loss. The only requirement there is that the amount recognized as an expense must be the straight-lined amount. In this example, I've given you the information that the short-term lease expense was 28,000 Rand in every year, and that the low-value asset lease expense was 10,000 Rand in every year. There is some narrative information that now needs to be added to this disclosure. It forms part of the note. First of all, you need to mention in both instances that the company has elected to apply the simplified accounting method for its short-term leases. The company has elected to apply the simplified accounting method for its low-value leases. That is a specific requirement in paragraph 5, where the entity needs to elect to use the simplified accounting, where you can expense the lease expense. Then under the short-term leases, there was a little bit of narrative information given in the question. That is just stating whether the commitment that the company has to short-term leases is similar or different from what a lease expense was recognized for. That information was given in the question, and it should just be rewritten in the note. The last item forming part of the income and expenses relating to the lease is the finance cost. The finance cost relating to the lease liabilities. In class example 12, we have identified these amounts and calculated that using the amort function. You are welcome to make use of the amort function, or otherwise you can make use of an amortization table, which is provided at the end of this example.